Hey, what's up, good people? How you doing? Listen, the Dow is rising, oil is rising, and Tesla's falling. We got a lot to get into today. Actually, follow the prompter below. Don't fall for any spam in the comment section. Hey, it's a good day. I'll take it. But just remember that the Dow, at this point, at the time of recording this, the Dow has risen over 900 points. It could cool off by closing bell, but just remember about when in doubt, zoom out. Now, that's good when the stock is going up, and it's also good to take a look when the stock is going down. So zoom out over the last 5 days, especially, and you can clearly get a better view of where we are in the market today. All right, so let's look at a few things here, and I believe it'll be very helpful for you today in your trading journey. Now, for those of you that don't know, the strength of the dollar when it goes up, if you're not investing, you would think that's a good thing, right? But it's not a good thing for the stock market. Okay. So if the dollar is strong, it simply means that people are moving their money to the dollar or bonds. They're moving their money to bonds. And if they're moving their money to the dollar, meaning cashing out of their stocks, that means it's less money in the market. And so that's why gold is one of the things that people run to, right? It used to be. All right. And now we have crypto, which crypto, was supposed to be a hedge against inflation, that type of deal. It was supposed to be digital gold, almost said liquid gold, but it's actually starting to act like the Nasdaq. So let's see a couple of things. Let's look at where the S&P could go. I just threw this together for all of you master charters out there. I'm just showing this as points, right? That's it. So where we can look at, right? So here's where the gentleman was talking about that the S&P 500 could come down to the 3,000 mark, which will be before the run up. All right. Just remember, we had a different president. It's so bad I can't even call the names of these presidents now without starting a political war. Here's where we were before the run up, right? And this is 3,000. And as you could see, what happens here, we had a bounce here during COVID, after COVID, and it came back and then revisited right back down here. So it took out these gains. Okay. So now that is important for you to know that the S&P could get there. I'm hoping that this won't happen until next year, right? We could be experiencing a bounce. Now, traditionally, September is the worst trading month, right? And we just came over the worst trading week. Though a lot of people think that we could, and it has happened in an election year, all right, midterm election years, where the market actually bottoms out in October. Now, if you've been following me, I've been saying that we could see a rebound in October, and it kind of aligns with what a lot of people see, that the market is bottoming out in October, and I believe that we could have a good Christmas rally, barring the Fed getting even more aggressive. Say he goes up 1 full point, or 100 basis points in the next FOMC meeting. So if he does that, then all bets are off the table. If something geopolitical happens with this war, then that changes the trajectory of everything. All right. So let's go back and look at this. Right. And so 3,500 was an inflection point that we discussed last week, which was a level of support that suggests that it was a safe zone to start buying under 3,400. I'm sorry, 3,500. Actually, 3,480. So I talked about that as a zone where you could start to buy. For those of you that are want to stay out of the market until this thing is over. Now, I'm going to tell you, no one knows when it's going to be over. There is no time in the market. And you go, Larry, isn't that what you're trying to do? No, I'm not trying to time the market. I'm not trying to get the absolute bottom. I just feel, and so far I've been right, that the elevator keeps coming down. There's three major legs down, and we're just into the third one. And you just look around you. So if you've been dollar cost averaging, which I have in small amounts, you're fine. But if you've been dip buying, it's been like dumpster diving. All right. So here's what I want to show you guys is when we get down to 3,200, actually some people say 33. I say my buy-in, like really big buy-in, is I'm looking, if we go here, I'm not waiting until 3,000. I'm going to start buying at about 32, let's just say 3250-ish, right? Because that's the ramp up when the previous president was in the market was doing good and the previous president was in office. And this is not an endorsement for the previous president. I want you guys to be clear on that. That's not me endorsing any president. I'm an independent. All right. So if we get back here, then that is where I would like to start really buying. And that's because this was pre-COVID. So here's COVID. This is March 16th through the 20th, right? And then we came back, hit this inflection point, and then we came here. So my buy range heavy, I'm looking now. Now I'm looking between 3,250 and 3,000. And that is for the hard recession. And hopefully that does not come until next year, right? So there's a short-term play and a long-term play. Short-term this year, we could bottom out this month and we could have a rebound. And the market can actually go up by who knows. And we can make money. We could be in plays that will allow us to take profits. And still, I'm not going all in the market because I believe that the hard recession is coming next year. But we will make money until then. This is very important information, okay? So I looked here and I looked at, is it good to buy before, during, or after a recession? This is very important. Before, during, or after a recession. When is the best time to buy? See here, investing before and during a recession, right? And so let's look at a few things here. Let me try to blow this up a little bit. There we go. Get this advertisement out of the way. All right. So stock prices often fall months before a recession begins, which also means that they also often bounce back up before the recession is declared over. Let me highlight that for you guys. Okay. So this is what I've been talking about, right? For those of you that are in equities, this is very important. All right. The stocks fall before the recession, okay, or before the worst of the recession. And then a lot of times most times actually, often bounce back up before the recession is declared over. Why is that, Larry? Because they never tell you when the recession starts, right? I'm going to keep going back to 2008. It was 12 to 14 months later, they officially announced we were in a recession, right? And especially now with midterms, politics has a lot to do with it. We're in the same environment, good people. Here we go again. America, I can't speak for other countries, but America suffers from short-term memory loss, right? We forget, but I haven't forgot, all right? So I want you guys to see that, okay? And there's something else I wanted to show you here. All right. Stock prices, bonds. Let's look at this. Stock prices tend to fall for the downturn begins. almost before a recession is called. If you're trying to make use of lower prices, you'll likely benefit most if you buy actually before the recession starts or during. See here? Or during. All right. And here they talk about also stocks that pay cash dividends. Okay. So remember, we like dividend stock. I always suggest that you guys have some dividend stock, especially in your Roth IRAs. If you have a Roth IRA, it is a good thing to have a dividend paying stock in your Roth IRA. All right. And then it talks about bonds and what have you. All right. So these are some of the things I want you to research and I want you to concentrate on. But look at this, good people. And this is why people say, why are you buying gold? Right? This is why. Most investors see gold as a haven. The price of gold often rises as markets plunge. All right. Investors begin buying stocks again when things are looking up, looking good. So, you know, as well as I know, that when the bull market, the next bull market comes, which follows a recession, all right? When the next bull market comes, what are people going to do? The people that tapped out at the bottom, so they bought up here, and then it comes down, they tapped out, right? When it goes back up, after it's run up, that's when they'll come running back. But for those of us that bought before, and me, I'm not a before, I'm more of a during. Those of us that bought during the recession, because nobody can time the bottom, we win because we dollar cost average. And it talks about it in this article about the best way to actually buy equities and crypto is to dollar cost average during the recession, because you're going to miss the bottom. And when you miss the bottom, it's hard to catch a running bull. I am going to run with the bulls in Spain one of these days. That's on my bucket list. But I also want to share this with you, all right? This is a MooMoo Monday, but I got something really cool to show you. Now, I've been talking about lithium, all right? We talk about the EV market and that type of thing. And there's one of the I'm going to go to, this is the MooMoo app, all right? Link in the description below. All right, check this out. At the bottom, if you go to markets, you see at the very bottom where it's highlighted, go up to the top where it says industry chain and hit it. Here's what I really like. So if you got all of these selections, right? Now, let's say you are researching and you want to know a good lithium company to buy, right? Here's how you do it. Look at the top where it says alternative fuel vehicles. I'm tongue twisted today. All right, you go here. And as you can see, these are the components. This is what I was talking about. Don't just invest in electric vehicles, but also the components that are in it. All right. So at the top here, you see it says lithium. Let's look at that. Now you have a list of all of these lithium companies, right? And so for those of you that say, hey, what's a good lithium company? That's the way you do it. And now look at this. There's some that's up. You see here the change in the second to the right. Some of them are up $1, 1%, 4%. And look at this. LITM, is that 19%? Look at this. Bam. Okay. I don't know what time frame that is. Oh, in a 5-day time frame, it's up 19%. So there you go. Look at that. And so just remember, let me go back. I know this one is long. Just remember, at the bottom, you go to markets. And then at the top there, you'll see it says paper portfolio. And then go down underneath that, it says stock screener. To the right of that, it says industrial chain. We select that. And then there you go. That's really cool. If you're searching for new stock and you want, hey, we don't know who makes lithium. Now we could have, if you got one lithium company, now you can see a whole list and you can see how they're performing. All right. I'm going to leave it right there, good people. I was trying to get a lot of information to you. If anything helps you, leave me a comment. Remember, that's in the MooMoo app, all right? And they have their most aggressive promotion to date, still going on. Click the link in the bio below, all right? We're calling this MooMoo Monday. We will see you later. Live, love, laugh, and learn.